this video. So today this is an introduction video. So how to deal with my videos, how to take advantage of medias. A quick shout out. I'm not a SEBI registered person, so don't take any advices from videos and put in your money into the stock market. So do your own research and then you take your decisions. I'm not responsible for any losses. I'm not responsible for any gains, because it is your money. If you lose your money, it is your money. If you gain your money, it will be okay for you. So that's why I'm only here for educational purpose. So there will be four kind of playlists available in my channel, starting with the high risk, mid risk, low risk and defensive stock. This is what I will be investing in. So it depends upon what kind of investor you are. I will be telling you in the back of video what is which type of your investor you should be, and is it okay to take an aggressive call or put your defensive call on your stock. So it depends morely upon you, as I said. So there are four key risks. It is a first one is high risk category. So this high risk category makes your money approximately about 3 to 10x. It is highly possible that you may go wrong. It is highly possible, not only in terms. I will be diversifying my entire portfolio into 60-70 companies in high risk portfolio, because I know how risky it is. If I am keeping my stock, I can gain 3x% of profits or 10x% of profits, or I may lose all of my money in stock market. So take your decision on it. As I said, do your own research, and if you are making 3x of money, then yeah, it's good. If you are not making 3x of money, you will be going to lose all of your money. That's why I will be categorized in this into high risk category. It will be losing all your money, or it will be gaining an aggressive approach. You can take an aggressive approach to keep your all money. If you lose it, yeah, you will lose it. If you get it, you will get it. So that's why I'm taking all my high risk, mid risk and low risk stocks and putting into a basket, and then I will be gaining about 25 to 30 CAGR, and it is a very good CAGR as of now, because Warren Buffett was about 19% CAGR, and if I am making 25 to 30% CAGR, yes, it is good. And the second point is it is a mid risk stock. So it is medium risk stocks, like as I told, Aavas Finance is a mid risk stock, and there is a Gland Pharma is a mid-risk stock, and there is some good chances of making money here, and you may lose 50% or 60% of your money in mid-risk stocks. So it is not guaranteed that you will be not losing any of money in the mid-risk stocks. Yeah, you do, because if you are gaining 2x of profits, yeah, it is good, like 100 rupees to 100 rupees, that's it. So that's why I'm thinking mid-risk stocks are good. So in this category, there are a lot of stocks as of now, that Aavas Finance, Gland Pharma, not IDBs, it will be falling into the low risk, and there are some bunch of mid-risk stocks available as of now, and you should take call. Is it booming up or hanging up? And example of high risk stock is that Zomato, Paytm, these are the high risk stocks. It may go from 0 to 100 or 100 to 0, we don't know. So that's why I'm telling, it's not a profit making company. We are only seeing the business perspective of it, and we will be betting on it. Understand this. Uber is not making any profits as of now from the last few years, from the last decade, but the investors are pouring their money into the Uber. Why? Because when the electric vehicles come, when the future AI comes, then automatically car drive itself to their destination of their clients. So that's why people are more inclined towards the Uber, because they see their ideas will be good in the future. Like after 15 years, there will be autonomous cars and they will be driven. So there is no Uber drivers are required. So in that kind of stocks, it will be categorized into high risk stocks. As I said, there is a Zomato. So Zomato will be going to high risk stock, because their business is good, but they are not making profits. If they are making profits, yes, the share price is approximately about 81 to 82 rupees, then 78 rupees, and it may boom up to 150, 200 or 300 rupees of share price. Or and Paytm also. Paytm, it is a very good stocks to buy in, but not making any profits as of now. But the business prospect of Paytm is so good that I want to invest in, but they are not making profits. So these will be categorized into high risk stocks, and the mid risk stocks, mid risk stock, as I said, they gone up and came down. As I said, the Aavas Finance, Gland Pharma, and I will be more inclined towards Aditya Birla AMC and 5 Paisa. These fall under the mid risk stocks. For every video, for every stock, I will be making videos and putting into that playlist. So go and check that playlist, and you will get an good approach. And the Rajesh Exports which I had done in the past is also from the mid risk stock. So you see, I had done somewhere around 550 or 560 rupees, and it fall about 520 or 519 rupees. So it is a mid risk stock. It may comes under low risk when it is a very good business. It is a very good profit making business. So I am in the margin of low risk and mid risk stock. That's why I was mostly about my some portfolio like about 10 or 7. I don't remember exact value, but I'm invested in the at Rajesh Exports. I'm going to invest if it falls under 510 or 508. I will be going to invest some more money in the Rajesh Exports. So please understand, it is my opinion. I am taking my decision because I done my approach, I done my research. That's why I'm putting my money. So if you are not doing any research and you are seeing my video, yeah, it's a good stock, then I will be investing. No, you will be losing money. That's it. So I had my aggressive investor. As I am an aggressive investor, I will be going with a mid risk and high risk stocks, and mostly about low risk stocks also, because my portfolio is consist of low risk stocks about 50%, and mid risk to high risk is about 30 to 40%. So I am a kind of investor where I will be going with the mid risk and high risk. And if I will see the low risk opportunities, examples like HDFC, it was in the consolidation phase for more than 3 years or 4 years, and the quarter results are good, the yearly wise profits are good, all things are good, but the HDFC bank is at the same level which was 3 years before. That's why I'm investing. The EPS value is also good. So that's why I was invested in HDFC, Kotak Mahindra Bank, and also the Page Industries, which was fallen from 52,000 rupees to somewhere around 36,000. You will be getting it 36,000 rupees. So that's why these comes under the low risk category. I always invested in the low risk category as of now, because it's a bull market. So my approach will be on the low risk. And high risk also, in high risk also I had a bunch of opportunities. So that's why I kept in the high risk opportunities also. So the defensive stock, ITC is not a defensive stock as of now, because the prices are boom up. I think maybe some bubble kind of thing is forming in the stock market. But as I'm seeing the P ratio of the stock market, like Nifty 50 and Nifty 100, that was showing not a bubble. But some stocks like some stocks like already which are in the high range, they may boom up. For example, Tata Motors, I think that will be that was a bubble, I think. I don't know, but I am thinking it has a bubble. So let's see what happens. I'm not invested in the Tata Motors because from the previous 5 years I checked the balance sheets, it was not so good. That's why I'm not put my Tata Motors into that share. If it falls under 300 to 400 rupees, then I will be making some money. And that's it. So these are the 3 categories. So for every category there will be videos available in my YouTube channel. So please go and watch there and understand the financial and business analysis, and then you do your own research and take your decision as of seeing the results and all things. If I'm saying this is a high risk, you may think it is a mid risk. So it depends upon you. It depends more upon you rather than me, because I'm a third person. I have my portfolio. I know what their potential is. You may not know. So if the price falls, you will be selling it again. That's the problem with the stock market. If you are not doing your own research, then people will be afraid of stock market. That's why you will be losing money. So please don't lose your money. Please you do your own research, and please make money in the stock market. As I said, I'm not SEBI registered person. This is all for educational purpose. How to diversify. This is only all for educational persons. I'm sharing my opinions. That's it. So please don't take my advices. I'm not giving any advices also. I'm making it clear. So it depends upon you. Thank you. And next, so there are 3 type of investors as in my perspective. So there will be defensive, there will be aggressive, and a kind of person with both mentalities. So what is defensive? So defensive investor is a person who will morely keep their money in the defensive stock and low risk stocks, and gaining somewhere profit around 15 to 16 CAGR. Yeah, it was good. 12 to 16 CAGR is also good for the defensive investor type of thing. So you can keep your money in some good stocks like TCS or HDFC Bank or Kotak Mahindra Bank or Reliance Industries, because you are seeing in a long-term perspective. That's why there will be no need of rotating your money, rotating your capital or something. So if you are defensive, go with the defensive stocks like HDFC, Kotak, or I will be making some videos about it. There will be some low risk also. You should be seeing for these low risk 35% of the stocks, because in 35% of this one, like examples, there will be opportunities in low risk stocks. As of now, there is a Page Industries, that is a low risk stock and you can gaining more money. There is a Pfizer, there is lot of stocks was there in low risk as of now. HDFC, Kotak Mahindra Bank, these all comes under the low risk stocks. And mid risk stocks, as I said, Aavas Finance, Aditya Birla AMC, EID Parry, as I made video about it. And there will be high risk stocks like there are a lot of high risk stocks like Adani Enterprises, Rajesh, not Rajesh Exports, it's a good stock. Maybe 5 paisa. It depends more upon making 10% of 100 10x of profits. So I think 5 paisa will be getting there soon, like after 10 years also. If you're making 10%, 10 times of your money, it's a good thing. So 5 paisa. So these are the kind of stocks I will be making separate playlist for them, so please check into it. It takes some time, about 2 to 3 months, but I will be posting whatever video as fast as possible, because I should be doing some research about it to keeping all things in mind and putting my videos in the YouTube. And as I'm a aggressive investor, as I said, there is 10% of defensive stocks in my portfolio. There is HDFC Bank, Kotak Mahindra Bank, and a lot of defensive stocks, but they are also come under into the low risk stocks. That's why I am invested in that. So in my holdings, like CDS, these are the defensive stock. When it comes to the low risk stocks, there is HDFC, Kotak Mahindra Bank, and Eicher Motors, and a lot of like Wipro is a good stock, but you should understand it comes under the mid risk stock. I will be saying doing other video about it. That's it in my low risk. And the Page Industries also low risk stocks. These also comes under the defensive stocks. Page Industries may not be comes under the defensive stock, but it comes under the low risk stocks. And the mid risk stocks, a lot of mid risk stocks in my portfolio. For example, CDSL, CAMS India, SBI Cards, Rajesh Exports, Symphony, Aavas Finance, TTK Prestige, Wipro, Bajaj, not Bajaj Finserv, it comes under the low risk stock. And the Clean Science, these will be under my mid mid risk stocks. And high risk stocks, I will be not keeping all my money in high risk stocks as of now, because it was a bull run. So that's why I didn't keep my money in the very high risk stocks. I will be putting all my money in next 3 to 4 months when the bull run is over. But I took the mutual funds, like small cap funds, which is categorized into high risk. So that's why I gave mutual funds the opportunity to make me some money. So I will be making that video. I was sitting at a good profits as of now. It was giving me somewhere around I will be posting a video about it in the future. And the both stocks, there should be 25 to 40% of 25% of defensive stock, 40% of low risk stock, 25% of mid risk, and 10% of high risk. So here my portfolio was diversified into this way as of now, but it will be changing into aggressive because I was in a bull run market. So that's why I not kept all of my money in the aggressive investor, because I can lose my money. That's why I kept diversified my money into the low risk and defensive stocks as of now, and mid risk also. So 97% to 98% of my stocks are in the defensive mode, or I can say both in the defensive and aggressive portfolio. But maybe I'm not taking most risk. I will be making another video about it for that. So this is the video. So go and check my videos. There will be some playlist available from today, and that will be categorized into mid risk, high risk, low risk, and defensive stocks. That's it. Take advantage of these videos, and take educational purpose videos only. That's it. Don't take any advice from my videos. Thank you for your time. Have a great day.